Hello, fellow traders. 'Tis I, the Rumpled One. It's Sunday, December the 9th, the year 2018. Let's talk trading. Weekly open and gap. Okay, second week of the month of November, and money and risk management. You definitely have to do that, right? Okay, looking at the monthly. Now we're 53 pips below the low. And you can see here, we're almost in the middle. 82 pips off the low, 70 pips off the high. For the week, you can see here we're in that lower wick zone. So look to exit this lower wick zone. And you see we've got a gap that hasn't quite filled yet. And we've got a couple others, handful of others that haven't filled. So as always, these are opportunities. It's up to you to take them. And looking at the daily chart, since it's still early, only about 6 hours into the trading day, you can see that we don't have much range. Buy zone, once again, we're fading the gap, so we want to be long. Okay, we had the pivot just above the buy zone. You can see here a short triggered, but I was, looking to fade. So you see it came down, came back. You should have scratched that trade because price is going to want to fill that gap. At least that's what I believe is going to happen. Once again, 32 pip range, rat zone not in effect. We took out the pivot. Here's the monthly pivot. You can see here price has already come down. Let's see. There's monthly support 1. And there's monthly R1. So chances are price probably try and return to that monthly pivot 128.70. That's a target. Okay, once again we took out the pivot. Looking to take out these two for the end of the year, but these just might stay open. Okay, and you can see here 2 ball at the bottom, green at the line. That was almost a 20 pip run right there. Once again, previous day midpoint used to be one of my staple trades when I first traded Forex. I used to just love trading off the daily pivot. Still do. I should probably put up my price travel analyzer or real-time price analyzer, and we can get some statistics for the daily midpoint cross. Wick zone, just waiting to see what happens. Prices within that candle body of the previous day. Holo, right now, you see we've got a short trigger here at 44 and the long trigger down here at 26. And you can see here we have a long trigger that already clicked at 40 on the inventory retracement bar. See another long trigger here on the 15 at 46. Short triggers at 40. Let's just see what if we've got, actually we don't have to change the chart. Okay, we got a daily long here and a daily short there, so they're far off. Okay, the previous daily, weekly, monthly, open, high, and low. Once again, we're not near the line, so no trades off of this chart. And you can see here the tick. It's just pretty much going sideways. Price is just going this way, even though that's not really accurate because other people talk about price moving sideways. If it can't move sideways, it has to move up and down. But when you look at the chart, it's just pretty much staying in a very narrow range. That's what they mean when they say it's moving sideways. It's but no, you can see here it moves up and down. Right here, if it's flat, it's not moving. It's staying the same. So by strict definition, there's no movement. Einstein line, as you can see, haven't had a trade off of the Einstein line. So we can go back here. Okay, we have an inside bar on the month, so you can see here, there's the breakout lines for the month. Here's the breakout lines for the week. You can see here on the weekly, the last inside bar, it broke out 2 days ago. So now you can see here, it looks like we might have an inside bar break. We had it the previous day, might have it again. So we have an inside bar daily break. Looks like it's happening, a Larry live trade right here, right now. And these are just frequency distributions. I am working on another idea that I had. It was kind of based off of the, not really off of inside bars, but it was based off of the opening range, where a lot of traders will look at the first hour of the day and look at the high and low of that candle, and that's where they'll take their trades. That'll create a zone, and price will crisscross through that zone possibly, or it might just go through it once and never return. So I'm thinking about doing that on the weekly basis, so that the first day of the week and then the first day of the month, and just see what it looks like. See if we can possibly get some nice trades off of those two levels. And I was also thinking maybe the first day of the year, but I don't know, after a while it may or may not come into play. So for now, I'm just looking at the first day of the week, first day of the month. And sometimes they're the same day, like December 3rd was the first trading day of the week and trading day of the month. But now we have a new week, so we'll be doing the 10th for the week, and the 3rd will be for the whole month of December, and see how price plays off of those levels. And right now we're just looking at the dynamic wick zone to see. You can see here where price is within the wick zone of this candle, upper wick zone. You can see here price just moved into these candles. And so they keep changing depending on where price is. Oh, picked up the wrong pair there. Okay. So that's it. Quick on the week. So every trader out there, remember, money and risk management, most important this month. Let's not blow it the last month of the year, right? Okay. So as you're trading out there this week, just remember, it's not what you trade, It's how you trade it. So go out there and drain the banks this week.